Welcome to the Deep Dive. Today we're digging into the latest market insights from July 26th, 2025, and we're really focusing in on the Nifty.
Mm-hmm.
We've looked closely at a market analysis summary and also its video script, trying to pull out the key takeaways.
Yeah, get right to the core of it.
Exactly.
Yeah.
Our mission here is to help you understand, what's actually happening in the market right now, what's driving it, and importantly, what it might mean for future moves.
Right. Especially helpful if you're trying to figure out how analysts connect all these different dots.
Absolutely. So if that sounds interesting, you are definitely in the right place.
Good stuff.
Okay, let's kick things off then. The immediate picture. What's the story with Nifty 50 spot as of yesterday's close?
Well, it closed at 24,837. That was down about 225 points.
Wow, nearly 0.90%.
Yeah, almost a full percent drop. And the analysis we looked at calls that a clear sign of weakness. No ambiguity there.
A clear sign. So when you see that nearly 1% move,
Mhm.
what does that immediately signal to you, just instinctively?
It's a definite head turner. It signals, a pretty significant shift in the immediate sentiment. Sellers were clearly in charge yesterday. And that kind of move, it really makes traders and investors, well, sit up and take notice. It sets a cautious tone, potentially, for the next session.
Sets the tone.
Okay.
And speaking of the next session, we often look at the gift Nifty for clues, right? That early peak.
Yeah, absolutely. It's a useful indicator.
So what's it telling us right now?
Currently, Gift Nifty is trading around 24,825.
Okay.
Which, if that holds, suggests Nifty might open maybe 20 to 25 points lower. So continuing that weak feel.
A little bit lower again.
But what's interesting is the futures side. It's at 24,846.880, but with basically zero change in open interest.
Huh. Flat OI. What do you make of that? Consolidation.
It could well be. Yeah, flat open interest after a down day often suggests the market's maybe taking a breather, consolidating before the next real move, or perhaps just waiting for more cues. It's like it's holding its breath a bit.
Holding its breath. Interesting analogy. But, markets don't operate in a vacuum. What about the global signals? Are they helping or hurting here? Seems like a bit of a mixed picture from what we saw.
It really is a mixed bag, and that's what makes it tricky right now.
Right.
You look at the U.S. markets, they closed positive. Dow up 0.46%, S&P 500 up 0.47%, NASDAQ up 0.35%. Pretty decent.
Yeah, solid green there.
And importantly, the VIX, the volatility index, was down almost 1%. Usually, a falling VIX is seen as bullish, right?
Yeah.
Less fear.
Usually, yes. But
Yeah. European markets like the FTSE and DAX, they were slightly down. So you have this positive U.S. close and lower volatility, which should theoretically support markets, yet our own Nifty showed weakness and Gift Nifty points lower.
So how do you reconcile that? Local factors overriding global ones.
It suggests that, it seems like maybe localized sentiment or, specific Indian market dynamics are having a stronger pull right now than the broader global picture. It means you really have to weigh these different signals carefully.
Definitely a puzzle to navigate. Okay, so with global cues being a bit muddy, where do we get clearer signals? A lot of people turn to the option chain data, especially with expiry coming up on July 31st.
Ah, yes, the option chain. It's crucial near expiry.
What clues is this secret map holding for us this time?
Well, first off, let's look at the put-call ratio, the PCR. It's hovering around 0.9 to 1.0.
Okay, so pretty balanced.
Yeah, it signals a neutral, maybe leaning a slightly bearish sentiment. Basically, for every call option out there, there's roughly a put option. No strong conviction either way, maybe a slight cautious tilt.
Right. Makes sense given the recent drop. What about specific levels? Where's the action?
Okay, this is where it gets interesting. On the call side, remember, call writers bet the market won't go above a certain level. There's huge open interest.
Where specifically?
145.45 lakh OI at the 25,000 call strike. That's massive.
Wow.
And another 64.62 lakh OI at the 24,900 call loss. These are serious walls of resistance. Think of them as ceilings.
Big ceilings. Okay, what about the floor, the support?
On the put side, where put writers bet the market won't go below a certain level, we see strong writing too. 51.54 lakh OI at 24,800 put, and 54.57 lakh OI at the 24,700 put. So those levels are acting as pretty solid support zones.
Okay, so clear boundaries emerging.
Exactly. And then there's max pain.
Ah, max pain. Always sounds ominous. Where is it?
It's calculated to be around 24,850 right now.
Okay.
And the theory is that the market tends to gravitate towards the max pain level near expiry because that's where option writers, the big players usually, lose the least amount of money. It acts like a sort of magnetic point.
A gravitational pull. Got it. So summing up the option chain, resistance clearly at 24,900, 25,000, support at 24,700, 24,800.
Precisely. The battle lines are drawn pretty clearly there.
Okay, that paints a very vivid picture. So let's connect the dots for you, the listener. What's the strategic takeaway here? How should one approach this market, especially with expiry just around the corner?
Well, putting it all together, the recent weakness, the GIF Nifty signal, the mixed global cues, and especially this option chain data,
Yeah.
it really points towards consolidation. The market seems range-bound for now. Those support and resistance levels from the options data are key.
So expect sideways movement, maybe slightly negative.
That would be the base case, yes. Unless we get a really strong push from global markets to break out of this range, expect Nifty to trade between, say, 24,700 and 25,000.
Okay. And for traders looking at expiry-specific strategies.
Given this expected range, strategies that profit from the market staying within a certain band could be interesting.
Like iron condors.
Exactly. Things like iron condors or perhaps bear call spreads if you have a slightly negative bias, but still expected to stay below that strong 25,000 resistance. Using strikes within that 24,700 to 25,000 range makes sense based on the data.
Makes sense. Tailoring the strategy to the expected market condition.
That's the idea. You adjust your approach based on whether the market looks like it's trending strongly or just chopping around in a range like it seems to be doing now.
So wrapping things up then. Nifty closed weak, looking a bit vulnerable,
Definitely.
but it is still holding above those key put support levels we just talked about. So there's a fight happening.
Absolutely, and hasn't completely broken down yet.
And keeping an eye on GIF Nifty is crucial for that immediate directional clue for the opening. Gives you that early edge.
It really does. So in this kind of market, being cautious seems wise. Favoring those range-bound strategies could be, well, your best friend right now.
Prudence is key.
Yeah. And maybe a final thought to leave you with. Considering these defined levels, the support, the resistance, that max pain point, pulling things towards 24,850, how might the collective psychology, your own psychology included, influence those final trading hours before expiry on the 31st? Especially if these global cues stay so mixed.
The psychological game on top of the numbers.
Exactly. Something interesting for you to chew on after this deep dive.